Good morning and welcome back to Almus Market Mornings. We start the day with GST reforms. Yesterday night, the government confirmed lowering of GST, concentrating largely on everyday consumption products. The GST Council has agreed on two rates, 5% and 18%, against an existing four-tier structure. Of course, there will be a different sort of structure and cess for the SIM goods. The new structure will come into effect from 22nd September. Coming back to treasuries, the 30-year yields in US, UK, EU took a plunge, and in fact, the JOLTS data jolted the markets, coming in much lower. It encouraged participants to become confident on the rate cut play. Morning, JK. Big tax reforms coming through for India. How are we reading the impact of these changes?
Good morning, Swaraj. Yes, it's a good news for Indian consumers. Definitely a big relief. Of course, I mean this is also the second reform from the government in terms of middle class population. Because if you remember, the budget also gave some relief in terms of tax rates for the lower level of income. Now, yes, on the implication, reforms should deliver, you know, a slightly higher fiscal number. So that is one thing that should be seen, maybe 20 to 50 basis points. The other one is also that, it can actually, lead to GDP growth also improving. Again, up to 0.5% is possible. The positive more positive thing would be it lower the inflation also by another 0.3 to 0.4%. Now that could mean another rate cut from RBI. So overall, that means our inflation will be kept in the lower band, and that's a good place to be in as far as economic expansion is concerned, and also for investment and consumption. So overall, it's a very good move. Markets have already reflected it in the Nifty futures in the Singapore market rising nearly 0.7%, and perhaps that would be built on in the coming days because market has been somewhat on the selling side. Uh, on the tariffs, of course, there are no indications of negotiations, and US officials seem to be adopting probably a slightly softer tone, despite India's demonstration of on the global stage of its closing ties with Russia and China. All these things would probably keep the rupee somewhat on a stabler condition. We haven't seen some good demand below 88, but no major follow through buying happens above 88.20. So we are stuck in that 88 and 88.20 narrow range. Perhaps maybe 10 paisa extension either side is likely. Now, coming to JOLTS data, see, it was definitely a affirmation of a weak jobs market, and the job openings fell big time. As per data yesterday, coming at 7.18 million. Compared to 7.35 million in the prior month, and also expectation was also for a steady opening at 7.34. Services sector was the main culprit in reduction of the jobs. Now, the important points to note is that the ratio of job openings to unemployment has dropped from 1.05 to 0.99. That is below parity, which is the first time since the pandemic time. And even the quits rate, though this month it has slightly inched up. Overall, quits rate is now staying near 2% versus a peak of 3% that we had seen, which means there is no major gaps in filling vacancies for the companies, and possibly this also leads to lower wage growth because employers are in a better uh, condition to negotiate. So overall, from rates perspective, it was a good market, but from economy perspective, obviously, it seems to be weakening further, and good need support, monetary policy support. Uh, In fact, what we have seen also is that the uh, other indicators of ADP and non-farm payrolls are weakening in the last few months. So that is the number that we'll be tracking in the coming sessions today and tomorrow. Now, this number actually led to a big reversal in the yields. 30-year yield fell by 10 basis points. 10-year yield fell by 8 basis points, and now almost near 95% probability of a rate cut in September. Now, what also added to the dovishness, or rather the fall in yields, was one more Fed member joining on the dovish camp, Mr. Musallem, who is now seeing a rate cut not only in September, perhaps more rate cuts in the coming months as well. And even Waller reiterated his stance about rate cuts. He also sees rate cuts over the next 3 to 6 months, multiple cuts. So all these things added to the dovish, or rather the yields coming off a big time. No, surprisingly, the dollar has not reacted despite the fall in yields and also expectation of more rate cuts. Uh, uh, Perhaps the dollar is still consolidating its oversold conditions and waiting for the real number going forward, the ADP, and more particularly the non-farm payroll number on Friday. So this could be a consolidation in terms of time. There is no other reason why I would think that the dollar should be stronger as well. Stock markets also got a boost. Initially, Dow was on the negative side, but it recovered its losses, while Nasdaq remained very well supported due to good news for Google, where a ruling allowed them to retain control of the Chrome browser and Android mobile operating system. So the Nasdaq actually carried the overall market on the higher side. Now, we have a holiday tomorrow in the local market, and we will be opening on Monday. But that's a tricky one because we have so many events lined up starting today evening, and who knows, there could be some fresh news on the tariffs on India as well. Market also awaits the Supreme Court ruling on the appeal that is likely to be filed by the Trump administration against the appellate courts, declaring the tariffs as illegal. Monday, we might well see a different level in the overall dollar as well as in the USD INR. So I think any excess position possibly the client should take care of in today's session itself. Thank you.
Thank you, JK. And yeah, as you mentioned, we are going into a holiday tomorrow at a tricky time because there's also the major market moving events. We also have the NFP tomorrow. When it comes to the overall data from yesterday, JOLTS, we saw quite a which the job openings fell quite a bit, 7.18 million against 7.3 million, which was the previous number. Overall, seems the jobs market is weakening. Rates market is more confident on the back of this data, on the betting on rate cuts. We also saw the sharp fall in long-term yields, 30-year yields, along with the fact one more reason for the fall in the yields was more Fed members joining the Dove camp. Mr. Musallam, as JK mentioned, Waller reiterated his stance on rate cuts and in fact highlighted the multiple rate cuts that can occur. Overall, dollar remains in a consolidation and it should likely remain in this consolidation till the NFP at least. That's it from us today. Thank you for listening. We'll catch up on Monday with the fresh round of updates.